Hello guys, I'm Mariano, the Trading Parrot. Since Bitcoin reached 100k on the 22nd of November, it's been pretty much only ranging, spending some time above 100k and the rest of the time slightly below 100k, giving us a point of control of 97k. And if you've been watching my videos, you know that there is enough reasons to think that we can go and not just hit again the 108k, but even go beyond that and now take up until 118k. And although I think that is doable and it might take more than one people by surprise, I think it's wise as well to start thinking on what is the potential downside in case we have a shake of the market, trapping additional shorts before shooting to the moon once again. I think the key here is the element of surprise. Just spend 10 minutes looking at crypto Twitter, go through the articles of Cointelegraph, and it's pretty much 100% agreed among the experts and analysts that we are due for 80k and even beyond. 75k, 65k I've been reading recently. And although I think there is a potential for some downside, I tend to believe that so many people being bearish are not gonna necessarily allow the price to go that low. In today's video, we're gonna analyze the potential for downside. And as a gift for you guys, I'm gonna share the areas that I'm thinking to buy. So if I'm wrong, I'm wrong. Please do not even consider copying my entry prices. Although I will share the entries, I won't tell you necessarily how much percentage of my account I'm using on that, so I can afford definitely to be wrong big and still have some cash to buy the dip and to find my way out in the green, which might not be the case necessarily for you. So take that into consideration, no financial advice. Guys, if you like this type of content, make sure that you're subscribed to the Coin Bureau trading channel. I'm committed to publish 3 videos a week in the channel, although I have to admit that during the holidays, this particular week has been difficult to keep up with my promise, but from the second week of January, things should go back to normal. We're gonna have plenty of surprises coming in, including live streams. With Dan and Aaron, we make sure that we publish videos every day covering all coins, Bitcoin price action, and tutorials. But if you're a hardcore trader and you wanna stay on top of the price action on Bitcoin and altcoins, make sure that you're also subscribed to the Trading Parrot. Apart from the holiday season, I aim to publish 2 to 3 videos per day. You can see that the interest in Bitcoin has made a new low of 25. This particular data point might not be settled yet. Google Trends, I believe, settle each candle once a week, but considering that we are coming from 65 all the way to 25, that is less than half. In the past cycle, we went from 31 to 21, so just 1/3 less, meaning that this particular cycle, we have lost a lot more retail in a very short period of time, and I'm not surprised because after hitting 108k and going back below 100k, as opposed to what we were doing in 2020, where after hitting the 5th element in the fractal, we started pumping like crazy. Instead, in here, we reached the top of the pattern and we broke down below, coming back into the pivots. And let's start talking about the daily time frame and why I'm looking for some prices at the low end and which ones are attractive to me at the moment. I think that a lot of people are looking at this range in here. Starting from the pivots of 91k, there is demand all the way to 75 in my opinion, and that is just judging by what people are saying in social networks. If we start looking at data, which we are going to do in just a few minutes, we're gonna find where people are placing the stop losses, how much bid versus ask there is in the order book, and all of that data hopefully is going to be in confluence with what they're saying publicly on social networks, at least when it comes to experts, analysts, and influencers, which indeed tend to influence what the rest of the people think. What I'm seeing in this pattern is a breakdown from an ascending wedge, which is a bearish pattern, then a retest, and this is causing that we are forming some sort of bearish structure in here, very similar to a head and shoulders with a neck around 93.2k. You could place the neck as well at 91.5, in which case we haven't yet complete the right shoulder, and the target of this pattern, considering the high from 108 to 91k, is giving us roughly the 75.4, which coincides with the first level of support from the CPR. Now, focusing just on the pattern, I think this is doable, and I get completely why everybody's talking about it. My problem with this target is that we need to think contrarian. We cannot assume that they are all right. There's something that should always put you itchy if you're aiming for something that everybody is talking about. Particularly with my own trading style, every time I have a theory and I hear my theory coming from a second mouth, I get a bit disappointed. The whole point of having an alpha is that only only a few should know about the alpha and take advantage. The market doesn't allow for everybody to benefit from the same thing. So there's two ways, or maybe three ways, of getting disappointed with this target of 75. The first way of getting disappointed is if the price goes to 75 and it continues crashing all the way to 50s, and that turns into a failed cycle. That will probably put at danger the monthly time frame, not just the weekly, entering in areas of bear market and only allowing later for a dead cat bounce. Disappointment number two is that we just pinch slightly below the neck, turning it into a liquidity hunt, going below the lows of the 6th of December at 90k. So basically just getting to the middle pivot roughly at around 88k, and then start shooting up, leaving everybody behind. If we look at the performance of December in 2023, we can see that something very similar happened. We have a rally from October that ended early December. Very similar. In this case, the rally started pretty much from August, putting higher lows and higher highs, but the actual impulsive way started also early October, putting a high on the 9th of December. Very similar. From there, we started having red weekly candles. In that case, we are on the same page, but this only ended finding a spring by the end of January. That spring was located right below the lows. We can say that the support at that point was 41k, and we pinch slightly below it into the area of the impulsive way with prices of end of November. End of November, in our case, it's somewhere at the 88k. So if we were to pinch something similar, we should be going to 88k and then continue up. Another reason to do that is because at this time in the market, we barely touch the bull market support band. You can see here from September, we never touch it until May. Once you touch the bull market support band at this time in the cycle, you immediately start thinking on a longer term distribution, in this case 1 year of distribution before starting the bear market. So if we want to have something similar, we should not hit the bull market support band in December, January, February and March. We should instead rally in parallel, pointing up with the bull market support band. At the moment it's located at 80k, so we have plenty of room for a very quick move down to maybe 82 without touching it and then rallying, but that depends on the timing. This is a moving target, of course. If we do that later in January like we did in 2023, then we can only go to 88k and then rallying instead of 80. Keep that in mind. We are comparing with 1 year ago. That's what we did. If we compare with 2020, we had drawdown, but we were pretty far, trading at 20k with the bull market support band being at 15k roughly, and it always stayed like that pretty much until April. So from the point of view of bull market support band, I think the area between where we are and that 80k and possibly inside the bull market support band is a buying area. So there is that second disappointment, right? The first one was to go way beyond the 75k and get somewhere in between 75 and 55, getting all the early entries long here potentially liquidated because of the additional move down of that scenario. The number two was just to enter in here and do a very shallow move down, not that far off from 88k, and then shoot back up. And the third one is literally in the upcoming days to start creeping up and heading to the moon without allowing any of this buying pressure to get executed, and then people start chasing the price with market orders on the fears of being left behind. And that's why I'm thinking to place some swing orders in this area immediately next to the top pivots at 92k. I also have interest on the 75 and on the 87. I will let you know in the next charts why that area is also interesting to me. And notice that I have at least 3 orders in this area, and you might be thinking, you just told us that you don't believe that we should be doing what the rest of the people think. And I think people are gonna make these mistakes. Many people are gonna place an order at 75 and it won't get filled, or it will get filled but the price will go beyond and they won't have enough cash in the account or margin to hold during that additional move down, or they won't get the order filled and the price goes just to 88 and goes back up, and they don't manage to take any swing trade in this range, hitting their heads against the table once again. And the third disappointment is they don't have any order and they just end up placing orders, not filling any, and then price goes up again. I think with distributing with 3 orders, I always get something to do with Bitcoin, not to mention that I also have orders with altcoins, so there's always some opportunities to take advantage. And if you're new to the channel, let me tell you that I already fill my spot wallet with Bitcoin, accumulating from $49 49 up until 59 with the last orders. All of those orders were shared on Twitter and in my videos in YouTube. And we did that right after having sold all my accumulation from the bear market at 73.5, which I also declared publicly to sell all my Bitcoin at that point. So when it comes to spot, I'm good to go. I am just having a little bit of holiday fun by looking for a swing trade in this very boring price action in the past month. Going to the 4 hours, you can see that we're building a channel to the upside. We have had already 2 consecutive breakouts to the upside, and I'm still looking for a third one in here with a resistance at 57 RSI and a potential target today of 69, which is the global resistance. I'm not even sure if we are gonna get there, but my first order is already filled, and I'm gonna monitor very closely if we get to 69 and it becomes resistance again, or if we break above it and I can rally a little bit longer. At this point in time, I will prefer the scenario of the breakdown below 92 and even going to 88 to get more orders filled and then rally with more volume. But it's always a trade-off. If we start breaking 88k as well, things might become that bearish in terms of sentiment for the remaining part of the winter that maybe the upside will come down as well. That's something that we are gonna be following up in the channel. Remember that these are all moving targets, not just on RSI levels, but also the trend lines are coming down. So 2 days ago, the target was 70 something. Now it's just 69. Let's look at the price action. I got 57 as the local resistance and the global resistance is at 69. So let's bring the reverse RSI and let's update those values. We need to drop this from 71 now to only 69. Support is at 29. Let's change that as well. And very conveniently, the pattern drawn by Lux Algo Price Action Concepts, which is a triangle in here, we are getting the RSI resistance of 57 right there on the triangle and the 29 more or less with the bottom of the triangle as well. I'm gonna hide some indicators and we're gonna look as well at the bear flag. Remember that we have this bear flag in here that is ascending. At the moment, the resistance is at 100k and the support is roughly at 93.6. Targets are 84 and at the top of the range 108. Of course, I am not telling you that we can do both at the same time. I am telling you that if you break support, you start targeting those levels. I think what is keeping people more scared these days is not this potential head and shoulders that we talk about, but the lack of support between 88 to the high 60s. You can tell that all we have in terms of structuring here are unfilled fair value gaps, and you should think about them as like a time machine. Once you enter in one end of the black hole, you automatically appear on the other end. And I think on Warner Bros. There was some cartoons from the 70s or 60s goofing around with that idea. Let me know in the comments if you remember which one. Looking at CME, you can see that we created a CME that I didn't track on the 23rd of December. I was too busy, probably eating and drinking. And on the 26th of December, we also left a very tiny CME gap, now located at 99.3. So I'm very lucky that I already have one order filled in here. So if I could get to 99 and fill that CME gap, I'm gonna be paying attention to see if this is just going to come back down in here and then break down below it, or if I can ride it all the way to 108, but with the lowest volume that I have planned. Remember, I have orders coming down. After some distribution from large whales on the 24th of December, there hasn't been much activity, and we came back to 68 in the ratio, which is much better than that day that we were at 1. The short-term holder realized price today is at 85.6, so that is another argument for looking for support somewhere there. If the short-term holders got too scared, they might drop their positions, attracting the price to that level. Just bear in mind that in this cycle, we are not longer using it as the ultimate support of the bull market, but more like oscillating around it. You can see yesterday on the 27th, actually on Friday, we have some outflows on the ETFs of 287, whereas on Ethereum, we have 2 consecutive days of inflows, which is positive towards the narrative of an altcoin season and a rotation of cash in that direction. Notice that across all these outflows that we see in red in this area, only 2 days we have outflows coming from BlackRock. We are days away from closing the monthly candle on Bitcoin, and I am not liking the shape of this candle for a monthly close below 100k with a large wick to the upside. It doesn't look very promising, and I am hoping that before the monthly close we can do something about it. On the weekly, we are still holding the yellow line in here on the RSI. The stochastic gave us a very sideways cross, which is not great. Price can still have some move ups even with a channel down on the momentum, but losing momentum is always kind of swimming against the flow. You can see in the short term liquidity, we have some liquidity pools slightly above 100k in red. That is a good incentive for a move up with my first order, but it doesn't necessarily guarantee it. And that's why I'm looking for orders slightly below the price as well. You can see this mountain in the middle represents the largest accumulation of liquidity around 89 to 86. Looking at the colors, it becomes a bit more evident where is a great area to add orders. If we have that move down in the price, tricking people that we're gonna go lower and we don't go lower, a good candidate in my opinion is that 92 to 91, leaving on the table below it, tricking people to think that we will take everything. But if that is not their plan and they planning to go slightly lower, then we have 90, 89 and 88.5. Let's zoom away to see what comes next, and I think 85 is pretty significant, and beyond that we won't be able to see much because this is the chart of the short-term liquidity. We need to move to the next chart. In this area I can see that once things become bullish again, and I have a bias towards that we will, but it's not guaranteed, the big price is in this area getting into 118k, and for those orders getting them filled at better prices, we get from the longer term the 88 to 87 being the first candidate, potentially that 78 starting with the CME gap that we left behind, and if we get to 69 and beyond, then we will start talking about the potential for a failed cycle or the beginning of an early bear market, which is completely crazy to think about because that breaks the monthly time frame, which is something we have never done again, and it will require further analysis to try to think how can we get out of that situation and remain in a bull market while breaking things that we have never broken in any cycle in the middle of a bull market. But it hasn't happened. It's just a big if at the moment. So my focus is on how to punish those shorts at the top in the most elegant way, using my funds in an efficient way as well. And another reason to enter with my first orders already is because I'm seeing a wall of bid liquidity in this area of 94. It is coming down, but it's impossible to tell at this point in time whether this is gonna make the move to 100k to hit that first wall of liquidity, or if we're gonna end up breaking down and getting my next orders filled before we do something. Just looking at this, I get a bias that the ask is reducing, whereas the bid remains at same levels at different times. And that to me says that the bulls might be getting ready for something by the end of the year. Interestingly, you can see on the delta that every time that we touch this line, we kind of break down and we are not able still to cross it, just like we have done since we identified that there was this channel in early November. If you look at the liquidations in this area, we have had after this liquidation of shorts, just two big liquidations of longs. And when I'm looking at what's going on in the past days, we have a fair amount of long liquidations. And another reason in here to leave some orders, assuming there is some upside, it's coming from the delta of longs and shorts. We are not at the very top of longs, but we are very close, putting that upside in the tricky area. So my next orders, I will push them away if I don't see enough red in this indicator. I think a good buying opportunity is if it does something like this and it breaks up again, as we usually track in this channel. So my first order is a little bit based on other indicators. I'll try luck with that, but as you can see, I have a plan if that doesn't go in my favor. Liquidations to the upside from the last 30 days, you can see we have 97, 99.7, and if we go beyond 100k, we have from 102 to 103 and then 105. That's been there for quite a while already, and it actually overlaps with the fair value gaps here at the top, the largest one at 105. So if we start a rally from here, contrarian to what the bear flag is telling us, which is we're gonna go lower, and I get lucky to be one of the few that took a long where everybody was saying let's go short, then I can take advantage of a rally either up until 100 or up until 105, take partial profits somewhere in the area, and then if we have still that downside, I can still add more orders in the lower end. You can tell that although I look at many indicators, I still end up doing something very simple, and I use the indicators mostly to highlight where are the big lies and what are the don'ts, more than trying to really time perfectly every single entry. I stay away from entering with large positions. I have never used all my capital in a single trade, but I know many of you do, guys. Be careful when you do those things. There's been distribution both on Bitcoin and Ethereum, and the SOPR is showing that many people are selling at a loss at these levels. That is causing a rotation of money at this top, but it's a great and healthy rotation from weak hands taking the loss. Typically at these levels and crossing those bands that are calculated with statistics are great buying areas. You can see the full picture of all the bull market. Every time you see an S in green, those are times when the SOPR has reached the bottom of the statistics that I calculate. This indicator is included in the TTP subscription with the VIP membership, but I keep showing it anyways, and whenever we get a signal, I show it on Telegram, Twitter, and Instagram. You are welcome to follow me there as well. And before I let you go, I'm gonna give you a Sunday treat. We've been talking about the RSI monthly, spending 90 days above 70 this cycle. We calculated that based on doing a linear regression of how many days we spent in 2017, in 2021, from 337 days to 181, and then if we do linear regression of that, we get 92. We also have this trend line pointing to what could be the top of 79. This is just linear regression, it's not magic, so it cannot promise anything apart from having just a rough idea. But if we zoom in, you can tell that we spend 1 month above 70. We are still above 70, but just 70.16, so that is giving us even less than 90 days. So if we came back down below 70, that is not a great news. So I'm hoping that if we have any sell off before the end of the year, that is not as substantial to bring us back below 70, because you can see that every cycle we get our prime time above 70, and having had just a single stupid month above it, as I say, is very difficult to picture after that to recover and to still go to our targets. It's not impossible, but it's gonna take a lot of imagination, creativity, and bullshitting to come up with some scenario where we still can. At the same time that Bitcoin is looking scary for many people, others versus BTC remains in the breakout area with an indecision pattern on the monthly, but it's still a breakout, and that's why I'm adding in some altcoins. I will probably cover altcoins starting from the second week of January when I'm back. I have plans today and the rest of the week. I need to travel back home, so I won't be able to do that yet. Guys, if you want to trade altcoins or Bitcoin, have a look at the description. I have 4 exchanges offering the best deals in the market. Bybit and OKX are my preferred exchanges when it comes to functionality. You get trading bots, signals, the largest array of altcoins, not just on spot, but future perpetuals as well. The biggest bonuses and discounts on fees. So if you can open an account with either of them, Bybit or OKX, I'm sure you're gonna be the happiest user. Those are the exchanges I use most of the time. But if you want to stay away from needing to do all the hassle of KYC, then requiring a VPN, consider opening an account on Tubit or Bluffing. Both of them are offering great bonuses and discounts on fees, and the reason we have 2 of them is not just because they are great exchanges, but because there's still some locations where people have mentioned they still needed to get VPN to access them. If that's your case, give a try to the other one and see which one works best for you from where you live. Have a great weekend, and I'll see you in the next one. Bye bye.